Well, joining us now to discuss a little further, if you want to know all about what stablecoins mean, Ed Engel is senior analyst at Compass Point. Ed, I mean, look, I think of stablecoins as basically digital treasuries. I mean, you know what I'm saying? Just talk to us a little bit about their significant role in the entire crypto ecosystem and why you think this has led to a successful IPO.
Yeah, absolutely. Essentially, stablecoins are tokenized dollars on the blockchain. So by tokenizing a dollar onto a major blockchain, whether it's public or private, this allows just a lot more efficient transfer of assets or programmability into U.S. dollars. So I think just today's investor, reaction just kind of shows you how there's a lot of interest from this type of technology from Wall Street.
And is it fair to say, you know, people say, why do we need tokenized dollars? But it's like, if you want to stay within the ecosystem, right? If you're trading in various kinds of crypto, the on-ramps and off-ramps into that system are points of friction. You can lose a lot of money along the way. You have to keep, it's almost literally like international transfers. You know, if you can avoid doing it, you want to avoid doing it. Do you think that's a way of understanding why stablecoins have become so large and so important?
Yeah, absolutely. I mean, I can send USDC to anybody in the world, whether it's in the US or abroad or anywhere, for literally fractions of a penny, and it settles almost instantly. So the friction isn't necessarily transferring assets on blockchains. It's actually just transferring assets from fiat currencies like US dollars into the stablecoin. So historically, we've relied on centralized exchanges like Coinbase, et cetera. But with Circle's, becoming more mainstream, we can actually integrate that on and off ramp into more mainstream payment providers, whether it's Stripe or even the traditional banking system.
Yeah, now the issue, of course, this gets back into kind of what led to the original financial crisis and holding the buck and all this stuff. But now that people are relying on these stable coins to kind of act as dollars within the crypto ecosystem, they have to be able to hold their value. And when they're tested in any kind of panic, that's going to be an issue. So what's the collateral that companies like Circle have to hold? And does the business model, you think, kind of pay off in the long run?
Yeah, absolutely. So, right now, regulated issuers like Circle are fully backed and collateralized by U.S. dollars and U.S. Treasuries, and that's how the business makes money, where about 90% of their reserves are held in short-term liquid Treasuries, and that generates interest income, especially in rate environments like today.
And these are one of the biggest holders of U.S. Treasuries, are they not? They and Tether are kind of the two leading stable coins, correct me if I'm wrong. And their holdings of U.S. Treasuries probably rival that of the Fed, Berkshire Hathaway, and the Japanese at this point.
Yeah, especially today when a lot of foreign nations are offloading treasuries. A big driver of new demand has been these stable coins, whether it's Circle within the U.S. or some of these international stable coins. So increase of stablecoin issuance definitely increases demand for U.S. Treasuries, which I think is good for the country.
Do you think the IPO is doing well because it still feels like a sexy new area of the crypto space? I mean, could it just become more boring and routinized over time?
Yeah, you have to remember, we haven't really had a major IPO in the crypto industry since Coinbase in 2021. So I think there's just been such a pent-up demand from institutional investors interested in this technology, where historically there wasn't that many stocks that they could own to get exposure to this extremely high growth area. So I think this is just a reaction to investors wanting to own blockchain technologies, and Circle very much fits in that bucket.